Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So we have seen commodity prices slingshot in the last few days here. Gold prices of course rallying over 4% since putting in that low on Monday. Also seen silver prices surge over 6% from Monday's lows. Alongside that, platinum prices, they've continued their incredible run up higher here, moving over 20% since this time last month. So as you can imagine, at the Gold and Silver Club, we have been capitalizing on this price action. As we mentioned to you last week on both gold asset of the day, silver asset of the day, we had built into 6 positions on gold, banked 2,500 points, and also 3 positions on silver, up over 300 points. So it's been a massive week here, and it really played out very nicely indeed with the sell-off that you typically get as you lead into Thanksgiving, the big capitulation move that we got after the Black Friday sell-off, of course, then the slingshot move higher that we discussed with you previously over the 1st, 2nd and 3rd of December. So feel free to go back and watch last week's commodity report. That has played out perfectly. And now as we go into a new week here, we have some massive news items as well, which of course include the European Central Bank announcement. We're awaiting on further updates, of course, regarding the stimulus bill in the USA. And we've also seen big moves here, not only on the precious metals, but copper prices. They've surged 78% now since March, hitting 8-year highs. Crude oil prices, they've rocketed here from $34 a barrel at the beginning of November to $46 per barrel into Friday's close, so they're up over 35% in the matter of 5 weeks. And we've stated it before, but now is the perfect time to get into the commodity markets. You absolutely do not want to miss the big opportunities here between now and the end of the year, then leading into Q1 of 2021. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. Now, first of all, moving over to gold, I'm going to make it mega simple for you here. Go over to gold, the price action that we saw back in 2017. Okay, so cast your mind back through the chart, have a look at the price action back in 2017 here, and look at the price structure compared to where we are at the moment. It is very similar in terms of the typical sell-off that you do get into the Thanksgiving, the Black Friday sell-off, as you mentioned, around the contract expiry as well. Expect a liquidation of positions, then the buyback as we go into December. So this chart here at the moment would definitely remind you of the gold price action that we've seen so far in 2020 since the highs that were put in during August. But no, it's not the 2020 chart. This is in fact the 2017 chart. And really what you want to look at is what could happen next here. Again, using the roadmap here of 2017, you can see exactly what happened next. We continued to drive higher, broke out then to the swing highs, continued that follow through move into January here, breaking out all the way back towards the previous highs here. So trade that we capitalized on massively, and this is where we are at the moment. Again, just show you the similarities with the price structure at the moment with gold. I'll just zoom out slightly here. Very similar. So we have seen that slingshot move higher here. As I mentioned, actually we built in another position on Friday, which is into profit into the close. We've actually currently got 11 positions on the metals, majority of which we've scaled into in the last week here. And 10 of those positions are protected. Only one new position which hasn't been protected yet, but it's into profit into the close. So this presents us with a massive opportunity here now as we continue to progress throughout December and throughout the remainder of this month as well. So basically the expectation going into next week, again, you need to be nimble. You need to be banking profits regularly, and it's not a buy and hold market. We mentioned this previously, but basically gold price action that we saw over the month of November from the high to the low, it dropped $200, right? 2,000 point sell off. So essentially, if you've been buying over the summer, over June, July, August, September, basically you've lost all of that profit, right? If you didn't bank your profits and you're just buying and holding, if you've not been nimble in the market, coming in and out regularly, you've lost all of that profit, right? Because we've seen a breakdown to those 5-month lows, but we've subsequently rallied $80 move off the lows there in gold in the last week. We've caught extremely near to the lows, as we mentioned to you in gold asset of the day and also silver asset of the day as well, building these positions with all of our members at the Gold and Silver Club. And now we've had a decent breakout in the last week. So again, going back to the price action here, my expectation as we go into next week here, we've got the European Central Bank announcement on Thursday Thursday. We're awaiting updates regarding the stimulus bill in the USA here as well. Of course, we've got the Brexit talks going on into next week too. So my expectation is that we will see more range bound to consolidation, but ultimately we're going to come back up. We're going to retest that neckline, and we're going to make a pop back toward that previous level that was broken down from the previous week here. So, okay, you can see all of that consolidation where we broke down from that 1850, 1860 handle, broke all the way down to 1764. I'm expecting consolidation to upside. And then if you look at this again on platinum, which has been absolutely amazing, hit all of our targets here. We mentioned to you previously that look at the platinum to gold ratio. We're expecting platinum prices to catch up at least 50% to gold prices. We identified that trade setup with you in detail on the commodity reports going back over a month ago. We've mentioned it so many times. The platinum to gold ratio, very optimal for platinum to outperform gold, and platinum has basically gone parabolic. So we've seen over a 20% move since this time last month. In fact, when we were identifying that trade with you, we were buying in at $873 per ounce. You can see, in fact, on Friday, it hit $1,073 per ounce, broken out over 2,000 points in the matter of just 1 month here. But what I would look at here is platinum is currently on the higher time frames. It's about 3 weeks ahead of gold. So if you look at the price action here, it has broken out on higher time frames. You can see where platinum has basically broken out. You've had a continuation pattern over the last 3 weeks here. Then you look at gold, and you can see where gold essentially has come back down. It's retested the lower end of this channel, and you've got the potential here for platinum to continue to lead the other metals higher here. So what I would be looking out for in the coming weeks is the potential for this strong push higher. Also need to know where to bank, where to reload, and especially with your entries, it's very important to be precise on those, because of the volatility with gold, with platinum, with silver right now. If you get the entry wrong, you can be right about the move, but you can still get liquidated. And this is what happens on a lot of retail traders. They keep buying too high, and then they end up getting liquidated, and they also panic sell out of their trades because they can't handle the volatility, and they're not aware of the different cycles in the market. They're not aware of the capital flows, and they're not essentially trading the same way that the hedge funds and money managers do in the market. So commodity trading is a zero-sum gain. In order for you to make money, someone does actually have to lose money. That's the way it works in both commodities and Forex. So if you're aware of that, this is why the retail market is predominantly on the losing side. It's where the hedge funds and money managers, the banks and institutions are making all the money. The retail traders are predominantly losing all the money unless they know how to trade like the hedge funds and the money managers and the banks, which is the most important point here. And of course, this is what we provide in terms of the research-driven approach that we utilize at the Gold and Silver Club. So then let's just go over to silver now as well. So silver, you can see here, we mentioned to you last week, we were buying at $22.25 per ounce. It was our lowest entry, in fact, that we caught last week. So it's up almost 200 points since that entry over the last 3 days here. Nice boom up in prices, up 9% in fact from the lows there, but ultimately up just under 7% in the latest week. We're right back at the neckline here. Again, look at it on the higher time frames. You can see we've come into a lot of support again around that $22 per ounce level. I would again look at that on the higher time frames. You can see where the price action is developing for a potential breakout here as we go into the next couple of weeks here towards the end of December. So we just need to see further follow through. And what we're seeing at the moment, of course, is the dollar is very weak right now, and we're also seeing gold and silver do well in other currencies versus the Australian dollar, versus the pound, versus the euro. So this is what I'm looking at, the potential for follow through, a breakout, and so forth. However, again, you need to be mindful of the different news items during the week which do affect the metal market. So you've seen it a lot on Mondays, the narrative regarding vaccines, where you've seen these breakdown and pull back in price, and also within the daily cycles as well. There are certain times of day where the metals are more vulnerable to selling, and there are certain times of day where they will tend to go up as well. So it's knowing that weekly cycle, the daily cycle, the monthly cycle, and the vaccine narratives that we've seen come out a lot lately have tended to be in the early part of the week on Mondays, and a lot of the sell-offs and liquidations that we've seen where you see these big moves lower in precious metals have been on Mondays or Fridays. So it's just knowing the different times of week where it's more optimal to get into trades, to bank your profits, to capitalize on the breakouts, but then knowing also when to lock in those profits, lock in the gains, and then get ready to reload again. It's much more profitable to be trading in these markets than just buying and holding, because if you buy and hold, often you'll get your timing wrong. You'll end up in drawdown, you end up losing money on those trades, and often you won't bank at the highs either. So often you'll buy and hold, and at some points you'll be very happy with the overall profit that you might have in the portfolio, but if you never bank it and realize the profit, then you can see all of that profit evaporate, and in fact even worse than that, you can see your trade go into loss, or your investment go into loss, because you're not timing properly, which is what is the problem with most of the retail market, utilizing outdated technical analysis strategies which are just not giving them any sort of an edge at all. It's very important that you do have access to data, market intelligence, and that you're aware of how the banks and institutions trade in these markets. They're moving over to the energy. So as we mentioned, energy prices, we've seen over a 35% move off the lows here over the last month. Energy prices have now, if you look at it on the higher time frames here, we've actually cleared above a lot of this resistance. We're now back above 46 US dollars per barrel into the close here on Friday. Not only with energies, right, we've also seen copper prices break out to 8-year highs. The whole commodity complex, as Goldman Sachs has reiterated multiple times, we're moving into a secular bull market on the commodities going into 2021, and the window of opportunity for you to capitalize is running out. You absolutely need to make sure that you're positioned correctly as we go into this in 2021, particularly if right now you might be on lockdown, you might still have restrictions in your area, and if so, it's a perfect opportunity to upskill your trading, learn a way to really supercharge your savings and be able to protect yourself, recession-proof yourself in the future. And of course, it is the new norm now, right? COVID-19, it's not going away anytime soon. There are vaccines which are coming out, but the distribution of that is going to take time. So we could see more lockdowns, more restrictions as we go into 2021. And there's really never been a better window of opportunity and time for you to maximize on this, particularly given that we've had some massive sell-offs recently on the metals, which sets up for this slingshot move that I've discussed with you previously. There are going to be just some massive opportunities that you do not want to miss out on. But again, it all comes down to timing, knowing the cycles, knowing the capital flows in the market, having access to intelligence, understanding when the metals are more likely to sell off versus go up, just trading that intraday cycle, the weekly cycle, the monthly cycle, the quarterly cycle. All of this will help you massively to get an edge in the market. Then you want to be combining that, of course, with trading the same way the hedge funds, the money managers, and the institutions do. So if you would like to learn a research-driven approach to the market, if you found that you've been chopped up continuously with utilizing outdated technical analysis strategies which just do not work in these market conditions, that you're aware of that, if you found yourself panic selling out of metal positions in the latest week, or you've been chopped up in the markets, this is where a research-driven approach will help you massively. So if you would like to join our community of successful traders, learn a research-driven approach to the market, and join the Live Trading Room mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive Live Trading Room webinars. You also have access to real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.